What if I told you that buying a dream home doesn't have to feel confusing or overwhelming? What if the key to unlocking your dream home in Lafayette came down to understanding just one thing? Your loan. Well, today we're going to take all the jargon, the paperwork, the financial noise around mortgages, and translate it into real simple terms that you can use. By the end of this video, you'll know exactly which home loans fit your situation, how to find a lender who actually cares, and how to avoid common financing mistakes that can cost you thousands. In this video, we're going to break down FHA, VA, conventional loans and talk about USDA loans that could really help you to buy with zero down in certain parts of Acadiana, and we'll go over what to expect when choosing between fixed and adjustable rate mortgages. I'm Drake Abshire with the SoLux Group, your Lafayette real estate expert, and I've helped dozens of families get their first homes, and the truth is it always starts with smart financing. So let's get started with the main types of loans you'll run into right here in South Louisiana. Let's start with the conventional loan, the classic. This is the loan most buyers will go with, especially if they have a solid credit and a stable income. You'll usually need a credit score of 620 or higher and a down payment as low as 3%. Now, while that 3% minimum sounds great, most buyers here in Lafayette put down closer to 5 to 10% to avoid a bigger monthly payment. Conventional loans give you flexibility. You can use them for primary homes, secondary homes, or even investment properties. Then there's the FHA loan, which is perfect for first-time homebuyers or anybody working on rebuilding credit. This program is backed by the government, which means lenders can approve buyers with scores as low as 580 to 600. You'll only need a 3.5% down payment, and closing costs can even be rolled into the loan in some cases. The trade-off, well, you'll pay mortgage insurance premiums, but that's what makes it possible to buy with a smaller down payment. Now, next up, the VA loan. So if you're a veteran, active duty service member, or an eligible surviving spouse, this program is actually one of the best benefits that you can get. VA loans are backed by the Department of Veterans Affairs, which means you can buy a home with no down payment and no private mortgage insurance. It's a huge advantage, and Lafayette has a strong community of service members who use this to build wealth through home ownership. And finally, the USDA loan, a hidden gem for buyers outside of Lafayette city limits. It's designed for homes in rural or semi-rural areas like parts of Carencro, Dussault, Youngsville, and Scott. You can get 100% financing, which means no down payment and often lower rates than those of conventional loans. If you're okay with being a few miles outside of the city center, the USDA program could really help you buy sooner and really save big. So here's a quick summary of what we went over. The conventional, you need great credit, but it has a flexible use. FHA means lower credit, but small down payment. VA, zero down, but it's only for veterans. USDA, zero down, only in eligible rural areas. Now, choosing the right one depends on your credit, your income, and your long-term plans. Now that you got a sense of these home loans, let's talk about how you will actually repay it, because the interest structure you choose can make or really break your budget. First, the fixed rate mortgage. This one's simple. Your interest rate stays exactly the same for the life of the loan, whether it's 15 or 30 years. Your monthly payment never changes, and what makes it ideal is if you like stability and predictability. If you plan to stay in your home for at least 5 years, fixed rate is usually the safer bet. You'll sleep better knowing your payment won't go up, even if the economy shifts. Then there's the adjustable rate mortgage, or ARM. It starts with a lower rate for a set period, usually 5, 7, or 10 years, and then it adjusts annually based on market trends. The lower initial rate can be appealing if you plan to move or refinance within a few years. But if you stay longer, there's risks your payments could rise significantly. Now, choosing a lender is just as important as choosing the loan itself. Here in Lafayette, we have some great local lenders like Reliant Mortgage of Acadiana, Standard Mortgage, or GMFS. They understand Acadiana's values, and they understand that our home buying process is often a family affair. Local lenders can also move faster, especially when you're competing against other buyers. You'll get personalized service, local underwriting, and in some cases, better communication throughout your transaction. And if you're a first-time home buyer, I can help you get connected with a lender who specializes in down payment assistance and good local grant programs. Sometimes these programs cover up to 5% of your down payment, and many buyers never even realize they qualify. Let's talk about a few key financial terms that make a big difference when comparing loan offers. First, your interest rate versus APR. Your interest rate is the cost of borrowing the loan itself. Your APR, the annual percentage rate, includes the interest rate plus other lender fees like points or origination costs. When comparing two loans, don't just look at who's offering the lowest rate. Look at the APR because that's what tells you the true total cost. Next would be PMI, or private mortgage insurance. This applies mainly to conventional loans when you put down less than 20%. PMI is an added monthly fee that protects the lender, not you, but once you paid your loan down to 80% of the home's value, you can request to have it removed. And then finally, pre-approval. This is your golden ticket when you're shopping for homes. So before you start house hunting, your lender will need documents like your W-2s, your tax returns, your pay stubs, and bank statements to verify your income and debt levels. Once approved, you'll get a letter stating your buying power. And in this market, that letter is the difference between getting your offer accepted or passed over. Now let's tackle a few quick questions that I hear all the time. How do I get a good mortgage broker in Lafayette? Start local. Ask your real estate agent. I've worked with dozens of lenders here. I can match you with one based on your needs, whether that's first-time homebuyer programs or jumbo loans. What credit score do I need to buy a house in Louisiana? Well, for most conventional loans, you want around 620. For FHA, around 600, and VA or USDA loans often approve below that. Can a realtor really help with financing? Definitely. While I'm not a lender, I work hand in hand with them every day. I can help you to understand quotes, compare options, and make sure that you're not overpaying with your fees and rates. At the end of the day, understanding your financing options is the most powerful thing you can do as a buyer. Your loan choice doesn't affect your monthly payment. It impacts your long-term wealth and your home equity and your ability to refinance or upgrade later. So if you're thinking about buying in Lafayette or anywhere in Acadiana, don't go at it alone. Reach out to me directly and I'll help you get matched with a trusted local lender who can walk you through your options and get you pre-approved fast. And if you found this helpful, make sure to hit subscribe because next time we're talking about some of the biggest mistakes buyers make: waiting too long. I'll show you exactly how the cost of waiting could cost you thousands in today's market. So click the next video and let's keep you moving toward home ownership.